Dog business consultants are back with another financial model, which is warehouse rental ExcelFinancial model. This model will help the warehouse owners to analyze, forecast, and visualize their financial performance. Starting with the model, first we have the table of content, which represents the input sheet, revenue analysis, financial statements, and other financial metrics to fulfill your business needs. Moving on to the input sheet, it will provide you the assumptions for the capital structure, the cost and the price of the services, monthly payroll, operating expenditure, capital expenditure, and account receivable and payable days. Next, we have the startup summary. The startup summary is the estimation of how much investment is required for the business, and it also consists the graphical representation of total cost and utilization of funds. Next, we have the revenue analysis. It provides the total number of units in each category of warehouse. The warehouse space is also given in the it is also given in the assumptions, the revenue generated from each category and the cost of services. The unit economics is also given. It shows the revenue per square foot, revenue per SKU, the revenue per pallet, and the throughput. Moving on to the depreciation and loan amortization schedule. Depreciation is a reduction in the value of your asset for the next 5 years, and the loan amortization schedule shows the monthly principal and interest payments. Now we have the monthly income statement. It mentions about the revenue, cost of services, operating expenses, and the net income before and after taxes. Similarly, we have the yearly P&L with the profitability analysis graph. Moving on to the cash flow statement. It shows the cash inflows and outflows of your company, which is further divided into operating, investing, and financing activities. Now we have the statement of financial position, which shows the total assets, equity, and liabilities as at the date assumed and forecasted. Moving on to the project evaluation, which shows the value of your company at year zero. It also shows the burn rate analysis and minimum investment required. The pre and post money valuation is also calculated with the percentage ownership held by investors and the founder. Moving on to the break-even analysis. The break-even analysis is the point at which the cost and income of your assets business are equal. The model shows the break-even with respect to the sales amount as well as minimum monthly break-even. Moving on to the sensitivity analysis, it is a comparison of valuation of your company. It actually shows the results, EBITDA margin in pessimistic, moderate, and optimistic scenarios. Moving on to the diagnostic sheet, it shows the different profitability metrics from the income statement, cash flow statement, the break-even analysis. Next, we have the KPIs and ratios. This includes the profitability, liquidity, solvency, and efficiency ratios with their graphical illustration. In the last, we have the dashboard, which shows the most relevant financial graphical representation of the model and depicts the key financial metrics for the better understanding of performance measures. It also shows the graphs for the unit economics. Thanks for watching.